Greetings traders, Jason here with SwingHigh.com. This is your weekend edition for the week of October 12th through the 16th, and what a week we had. On Monday and Tuesday it looked as if we were going to roll over and form a double top, and that would have been very bearish, but instead we had some good earnings come out, and on Wednesday and Thursday we punched new highs for 2009. Friday was a kind of lame day, but we finished under some major resistance, so that could be the start of a bear case. Keep in mind that we are above all of the moving averages, as well as the fact that we have broken some major resistance recently. So we have quite a bit of support to fight through if the markets are going to go lower here. Volume looked better this week. Did come back to average in the near term, but it's still very light compared to what we've seen in the past. So I'd like to see more volume come into the markets to confirm these moves, but for now I'll continue to trade lightly as things are a little indecisive here. Anyway, I talked about some of the resistance we finished under on Friday. We did kind of fall back out of this rising wedge we have here. And we're also sitting under this major maroon monthly trend line that I'll show you in a second. I drew a new rising wedge to show you that this 6-month rally we've had here, or 6-month plus, from March of 2009, the whole thing has formed a rising wedge formation. Rising wedges are bearish when they tend to break down more often than they break out, and when they do break down, they usually constitute a change in trend or a downtrend beginning. Let's look at the weekly to see my major resistance areas I've drawn here. 110 area, you can see right back here in October of last year why this is a big area of resistance. We have this huge gap down, and still has yet to be filled, so we have a lot to fight through right there. I would not be surprised if we start to roll over and stall out here at the 110 area on the SPY or 1100 on the S&P. If we do break out of that and things are looking convincing, I do expect a run to the 120 area on the SPY, which is this other gap down or start of a major downtrend back here. That's 1200 on the S&P. Let's look at the monthly real quick. That big maroon line, as you can see, I have it drawn from the all-time highs of the S&P. We tagged it once and then dropped, and now we're touching it again. So we are at major resistance on multiple time frames. The monthly with that maroon line, the weekly with this gap fill back in October of last year, and the daily with this rising wedge we just finished under, which this rising wedge that we just finished under. Let's look at some of the market internals this week. They corroborated the move rather nicely for the most part. This is the VIX, the volatility index, or the fear indicator. Usually the VIX goes in the inverse direction of the markets. When the VIX is going up, people are scared, and people do expect a drop in the market. When the VIX is going down, people expect the market to rise. So, and we also like to see the VIX move 3 times in the opposite direction of the moves that we see in the markets. So this week, we had a nice drop in the VIX. Could have been better, but I'm not complaining. And we finished under 2150 on the VIX, which is huge. Keep in mind that back in fall of last year, we saw high 80s. We saw some really huge spikes in the VIX, and now look at where we are down here. So that's rather bullish looking there. Let's also look at the tick and the trend real quick. Actually, I'm going to have to go to make another video. I have a lot to say, and I have a 5-minute time limit, so I'll cover the tick, the trend, a bunch of trades I made, and what to look out for next week in my next video.